Bitcoin just hit $81,000 and got thrown back. Right now, most people watching this chart think the story is over. They think 81K was the top and the pullback proves it. But there are two things happening in the next 48 hours that almost nobody outside the derivatives desks is talking about. One of them is worth $6.4 billion. The other one involves a man named Kevin Warsh, a stage in Jackson Hole, and a fight over who actually controls the price of money in this country. And when you put those two things next to each other, the $81,000 rejection starts to look a lot less like an ending and a lot more like a setup. Quick disclaimer before we go further. This is not financial advice. This is a breakdown of the data, the catalysts, and the scenarios. You make your own decisions from there. Stay with me until minute 18, because once I show you where the two catalysts collide, you'll understand why this Friday might matter more than the last 2 months combined. Morning, afternoon, or night for you right now? Drop it in the comments. I read everyone. Let's start with what actually happened. Bitcoin ran from the low 60,000s all the way up to roughly $81,238, its highest level since mid-May. Then it turned around and slipped back under 80,000. Here's the part people get wrong immediately. A rejection is not automatically a reversal. After a move that violent, tens of thousands of dollars in a matter of weeks, some kind of pullback is almost expected. Markets don't move in straight lines, no matter how badly we want them to. The real question isn't, did it get rejected? The real question is this: do buyers show up in the high 70s? And can Bitcoin reclaim 80,000 with actual force behind it? Right now, there are two camps forming. The bears are saying 81K was the top, full stop. The bulls are saying this is just a reset, a breath before the next leg higher. Now, here's the part nobody is paying attention to. The technical chart isn't even the most important thing happening this week. There's a much bigger mechanism sitting underneath the price action, and it expires in a matter of days. This Friday, roughly 81,700 Bitcoin options. Contracts expire, worth approximately $6.4 billion. Before you get excited, let's be precise about what that number actually means, because most channels get this wrong. $6.4 billion is options notional. It is not $6.4 billion of fresh buying pressure hitting the market. It's the total value tied up in contracts that are about to settle. That distinction matters a lot. Right now calls out number puts and the reported max pain level, the price where the largest number of contracts expire worthless, sits around $68,000. But look closer at the strikes, because this is where it gets interesting. The $80,000 strike is carrying roughly $157 million in call notional. The $75,000 strike is carrying roughly $236 million in call open interest. Those aren't random numbers. Those are the exact zones where price has been fighting all week. Comment below if you're watching the options market before you watch the price chart, because that's exactly what the smart money is doing right now. Here's a simple way to picture this. Imagine Bitcoin sitting between two magnets. One magnet sits around $80,000. The other sits lower, down near max pain. As Friday approaches, market makers who sold those options have to hedge their exposure. That hedging activity can genuinely amplify price movement around the strikes carrying the heaviest volume. Two paths open up from here. Path 1, bullish. Bitcoin pushes back through 80,000. Short-term traders start chasing. Calls gain value fast. Hedging flows can actually reinforce that upward momentum. 81K breaks, 82K becomes the new target, and 85,000 starts getting mentioned as the next psychological level. Path 2, bearish. Bitcoin fails to reclaim 80,000. The options expire, leverage unwinds, profit-taking accelerates. Bitcoin drifts back down toward lower support, potentially testing that max pain zone. Neither path is guaranteed, but this is exactly why this matters right now. Because whichever direction wins this fight will set the tone for the next 2 weeks, not just the next 2 days. Here's the strange part, and I want you to really sit with this one. Bitcoin doesn't need to break 81,000 before Friday's expiry to end up bullish afterward. It could spend the next 24 hours doing almost nothing, just compressing quietly underneath resistance, frustrating everybody watching the chart. And then, once all that options positioning clears out of the system on Friday, the market could suddenly become far less constrained than it's been in weeks. Write that down. The real volatility may not come before the expiry. It may come after it. But options are only half of what's happening this week. The other half is arguably bigger, and it involves the Federal Reserve. This Friday, Kevin Warsh is scheduled to speak at Jackson Hole, and investors are watching closely for how he addresses inflation, long-term interest rates, and the size of the Fed's balance sheet. But the real tension isn't just what Warsh says, it's who he's disagreeing with. Treasury Secretary Scott Bessent has been pushing for more active intervention in the long-term Treasury market. Kevin Warsh, by contrast, has shown a stronger preference for letting the market set rates, with less reliance on heavy-handed intervention from Washington. Here's the line I want you to remember. Treasury wants more control over the bond market. Warsh wants the market to keep more of that control for itself. And Bitcoin, whether people realize it or not, is sitting directly between those two philosophies. Are you positioned for that kind of split, or are you just watching it happen? Here's where the fiscal side of this story comes in. Treasury recently announced it plans to at least double certain long-term debt buybacks from $2 billion to at least $4 billion per operation, starting September 9th. After that original announcement, Bitcoin responded strongly. A weaker dollar and rising concerns about currency debasement gave both Bitcoin and gold a real boost in demand. Now, I want to be careful here, because a lot of channels get sloppy with this next part. Treasury buying back its own debt is not the same thing as the Federal Reserve running quantitative easing. They are different mechanisms run by different institutions for different reasons. But markets don't always care about the technical distinction. If investors interpret the move as broadly supportive for liquidity and risk assets, Bitcoin can still catch the tailwind, technically correct or not. Now here's where the story gets potentially explosive. There have been reports discussing the possibility that Treasury could deploy a portion of a very large cash balance, reportedly around $950 billion, toward bond buybacks. To be clear, Treasury has not committed to deploying that entire amount. This is a possibility being discussed, not a confirmed plan. But here's the part that matters for you as an investor. If people in the market start believing Washington is willing to use a cash pile that large to support the bond market, they don't necessarily wait around for the money to actually move. Markets price expectations before they price reality. So follow the chain with me. Treasury cash, the bond market, yields, the dollar, overall risk appetite, and eventually Bitcoin. That's the pipeline. And it's exactly why what happens on Friday could ripple far beyond crypto Twitter. I'm not going to make this a one-sided bullish video because that wouldn't be honest with you. Treasury intervention hasn't solved the underlying fiscal problem. Reports have highlighted criticism that these buybacks may not actually address the deeper issue, persistent deficits and a rising debt load that isn't going away. Stanley Druckenmiller has been especially blunt about it, describing the strategy as price management rather than genuine liquidity management, and warning it could ultimately undermine credibility in the Treasury market itself. Here's the domino effect if that criticism proves correct. If bond investors reject the intervention, yields could climb right back up. If yields rise sharply, financial conditions tighten across the board. And Bitcoin could discover that the $81,000 rejection wasn't temporary at all. It was the first sign of something bigger turning against risk assets. But here's where things start to break down for the bears too. There's a scenario where being aggressively short right now could backfire badly. Walk through this with me. Bitcoin stays below 80,000 for a few days. Sentiment online turns bearish. Traders start piling into shorts. 75,000 becomes the consensus target everyone's calling for. Then Warsh steps up to the podium and delivers a message softer than the market expected. At the same moment, Friday's options expiry clears out the heavy positioning. Bitcoin reclaims $80,000. Shorts start covering in a hurry. Momentum traders pile back in behind them. The potential result: 80,000 breaks, 81,000 gets retested, and suddenly the market is talking about a breakout attempt instead of a breakdown. I want to be clear, this isn't a prediction. It's the exact setup a lot of experienced traders are quietly watching for. This is where smart money is already positioning, whether or not the headlines reflect it yet. Now, let's give the bulls their fair argument because it's stronger than people give it credit for. Bitcoin has already proven it can reclaim $80,000 once. That's not nothing. The recent rally has been supported by a genuine combination of forces: a softer dollar, Treasury intervention, short covering, improving sentiment across crypto, and real institutional demand showing up in the flows. Bitcoin was up roughly 28% for the month of August, as of August 25th, putting it on pace for its strongest monthly performance since November of 2024. The bulls don't need a miracle here. They need one specific thing to happen. They need $80,000 to flip from resistance into support. That's it. That's the whole bull thesis in one sentence. Hit, like if this is starting to make sense, because we're about to bring both sides of this story together. Before we get to the levels, let's zoom out for a second, because this isn't the first time Bitcoin has walked into a big options expiry sitting right under a major resistance level. Historically, when open interest clusters heavily around a round number strike like $80,000, price tends to gravitate toward that strike in the final days before expiry. Traders call this the pin effect. Market makers hedging their books can, intentionally or not, keep price hovering near the strike with the most contracts outstanding. That doesn't mean this time plays out identically, but it does mean the compression we've been seeing under $80,000 fits a pattern we've watched before. Quiet, frustrating, low volume trading right up until the contracts actually settle. And here's the part that tends to surprise newer traders. The real move, historically, has often shown up in the 24 to 48 hours after expiry, not during it. Once the hedging pressure releases, price has more room to actually express what the underlying buyers and sellers believe. So if Bitcoin feels unusually quiet over the next day or two, don't mistake quiet for weak. It may just mean the market is coiling, waiting for Friday's contracts to clear before it shows its real hand. That's exactly why patience matters more than prediction this week. Let me give you something practical before we get to the big reveal. $81,000 to $81,300. The recent high, the breakout zone everyone is staring at, $80,000. The psychological battleground, and the exact strike carrying the heaviest call positioning into Friday's expiry, $75,000. An important downside level, and the strike with the largest concentration of call, open interest below current price, $68,000. The reported max pain level for Friday's expiry, the level where the options market has the least incentive to move. Don't fixate on any single number in isolation. Watch how price actually behaves when it reaches each of these zones. That reaction tells you far more than the level itself. Now put the two catalysts side by side, because this is the entire point of this video. Catalyst 1, $6.4 billion in Bitcoin options expiring within days. Catalyst 2, Kevin Warsh speaking publicly while the divide between the Fed and Treasury over who controls the price of money grows harder to ignore. One of these catalysts can create raw volatility. The other one can determine which direction that volatility actually goes. And they are arriving almost simultaneously. That's why the $81,000 rejection was never really the whole story. The reaction after these two events collide, that's the real story. That's what's going to define the next several weeks of this market. Do you think the system can hold? Or is this the beginning of something bigger unwinding underneath the surface? Bitcoin has two paths in front of it. It can stay below 80,000, confirm the $81,000 rejection, and force a lot of traders to rethink this entire rally. Or it can absorb the options expiry, sit through Warsh's message without breaking down, reclaim $80,000, and attack the 81,000 high all over again. And if that second path plays out alongside a weaker dollar and renewed expectations of liquidity support, the rejection everyone's talking about right now could turn into a full bear trap. That's the part I wouldn't ignore if I were you. Because the biggest moves in this market rarely happen when everyone's uncertain. They happen when everyone becomes convinced they already know what's coming next. Right now, almost everyone is staring at $81,000 like it's the whole story. But the real question is, what happens after Friday? What would you do if this actually plays out the way the bulls expect? Tell me below. Was 81,000 the top, or just the pause before the next move? If you want daily breakdowns connecting Bitcoin to Treasury liquidity, the Fed, national debt, bond markets, and global capital flows, Subscribe to the Wealth Continuum. This is exactly the kind of setup we track before it becomes obvious to everyone else. And if someone in your life keeps saying Bitcoin is done every time it pulls back, share this with them before Friday, not after, because tomorrow's chart may look nothing like today's,